What's up, guys? Welcome back to another episode of the Mathis Real Estate Group show. Today, we are finishing up our mini series on how to buy a home in 2020. All right, so before this, we've covered some of the initial steps in getting yourself ready to buy a home, all the way from looking at your finances. Can you afford a home? How's your credit? What do you really need for a down payment? We covered that topic. And then we dug into the process of how to buy a home, all the way from meeting with professionals like a real estate agent, talking with lenders about financial programs that might work well for you, and then figuring out your wants versus your needs in your next home to really determine what you're looking for and what would work best for your lifestyle. So today we're talking about the third part of all this, which is the contract to close portion. Now, we get a lot of questions around how does this work? And we find a lot of times when buyers get into this part, they don't quite understand the steps or what's going on. So what we want to do is give you a broad overview, and with the disclaimer up front, every real estate transaction is different. It's like people, right? Everybody's a little bit different. Even if you have a lot of similarities with someone else, you're still a little bit different. That's how real estate transactions are. That's how they typically run. So 4 key steps through the contract to close that we're going to cover today. The first one is offer acceptance. So this means that you as a buyer have made an offer on a home to purchase it at a certain amount with some details. Our contract's only 15 pages long. It's getting longer every year. So there are certain things in there that you have agreed to detail-wise with the home seller, and you guys have agreed upon a price, closing date, and some other parameters. Otherwise, you guys are good to go. Now, at this point, what happens in North Carolina is what we launch into what is called the due diligence period. We're going to talk about that next. That's our second key step. But as soon as that offer is accepted, there are 2 things you have to do right away. The first is due diligence money. So you actually pay a fee to the sellers that is non-refundable. Hear me clear. It is non-refundable to you for any reason. If you back out of the contract, say you had a bad dream, it allows you to back out of the contract without being in breach of contract, and it sticks with the seller. They get to keep that money. If you go to closing, that money is applied back to you on the closing disclosure. So you do get it back if you close on the home. The other deposit you will make is something called an initial earnest money deposit or additional earnest money deposit. The difference between the two is that one is applied immediately at the time of contract or within 5 days of the effective date of the contract, while the other is tied to another date that you determine and you and the seller agree on. Either way, that money comes out of your account. You do have to pay that to the attorney. The due diligence check goes to the seller. Earnest money goes to the closing attorney for them to hold in escrow. Now, key point number 2, due diligence period. It is exactly what it sounds like. This is your period to do your due diligence. You're going to do inspections, you're going to do appraisals, you're going to get estimates on any repairs needed for the home. And we do encourage you to get an inspection on your home, even if it's new construction. When we have these new construction inspections, I cannot tell you how many times things come up where we see major issues that have been missed or just things throughout the home. So always get an inspection and make sure you're using a licensed home inspector. We recommend several that we've worked with throughout the years and they know what they're doing. A bonus on that is if they have any other certifications. So a home inspector who is also a general licensed contractor is a fantastic person to have because they know the house at a very deep level, and they can also give you an idea of, okay, it probably will cost you this much to fix this item versus this item. The appraisal is something that is ordered by your lender and it is paid for you up front. So this comes out of your pocket right away. And what they'll do is they're going to go out for the bank and they're going to assess the value of that home. And this is where it gets a little sticky in the market because appraisals can come in higher, which is great for you as a buyer because that means you have instant equity in your home. They think your home is worth more than you're purchasing it for, or it can come in lower boo-hoo, this is where we have to go back and negotiate then the purchase price. So what we would really like to see is it to come in at contract price or higher. And every area is different. And again, these appraisals are subjective. They are so subjective. We've had one house where we had 3 different appraisers come out on the same property and had a huge range of values from all 3. So given that we get past those 2, at that point, we do something called a due diligence repair request. And this is where if you see things on the inspection report that you would like to have repaired or fixed by the seller, we can request it. But remember that the original contract states that you're buying the home in as-is condition. As-is condition. So they don't have to do anything to the home, but many of the times we see sellers willing to do something to the house, whatever you request. So we'll request that from them, we'll negotiate back and forth, typically we see a couple times, and then all this is done prior to the end of your due diligence period. Now, for any reason during this due diligence period, if you are unhappy with anything, you're not happy with the home, you're not happy with the inspection report, maybe there's a major issue and the seller isn't willing to fix it, whatever the reason, you have the ability as the buyer to back out of the contract. And as long as you do it in the due diligence period, you will get your earnest money back. You do not get your due diligence money back that stays with the seller. That is a fee you are paying them to take their home off the market so that you can inspect it and do your due diligence to see if it's a home that you want to buy. Now, given that all that goes well, you get to the due diligence period, you guys come to an agreement. At that point, we go into the 3rd key step, which is the due diligence period to close, right? So after due diligence, think of this like a milestone, that date is ending. From there, now we have the closing date. From that little gap right there, that's our period to close. And during that period, what we're really looking for is full loan approval from the lender. And this is something where they're gonna go through and they're gonna verify income, they're gonna verify credit, they're gonna verify all other conditions of the loan. Certain loans have different stipulations is what they call them, or STIPs. And they come back with different things based on the type of loan you're getting. So if you're getting a VA loan, an FHA loan, a conventional loan, all of that will play into what is required by the lender for you to get through to closing. Only thing we can tell you is be timely getting your documents back to them. You have got to be on time. If they request a document from you, don't wait 2 or 3 days to get it back to them. Time is of the essence when it comes to whatever the lender requests from you. And this is for a big reason that we want this out is because the closing disclosure is a document prepared by the lender and sent out. It has to be sent out 3 days prior to closing for us to be able to close your home. So it's not like you could turn in a document today and close tomorrow. You need 72 hours from the time it's sent out that you've had it for us to be able to move to closing and go to the closing attorney. So again, timeliness is the key thing in this period. Anytime someone asks you for something, just jump on it and get it. Let us know if we can help with that too. We help a lot of our clients. If you need things emailed somewhere, sent over, scanned, whatever it is, we're on top of it and happy to help. And the last piece of this, the 4th step, is closing. Woohoo, closing day, right? Lots of fun, and it's awesome. So we're super excited about this day. Proper ID, make sure you have your proper ID with you. I can't emphasize that enough. When you go in to sign closing documents, they need to make sure that you are who you say you are since you're buying a home. Now, one thing to note on this day is that keys are handed over to you after the deed is recorded. You're going to highlight that in your notes. Your keys are handed over to you after the deed is recorded. Now, a lot of counties now record electronically, so it's a little bit faster than it used to be. And technically the home is still owned by the seller until you get the deed recorded. Now, this is also why you'll hear us try to avoid Friday afternoon closings, just in case the deed doesn't get recorded in time, or there's some hiccups with the loan, or if a closing process, something's going on that takes longer than expected. We want a buffer in there. So you'll typically see us try to schedule your closing for a Wednesday or a Thursday and a Friday morning if we absolutely have to. Again, that all depends on your schedule and your time frame around it. And it's not that we haven't closed homes on a Friday. It's more that we do not like to in case something goes wrong and we're bumped all the way over the weekend to the next Monday, especially if you have movers and moving trucks and all that stuff going on. It's a headache and we don't want you to run into it. So those are the 4 key steps from the contract to close portion. Now, this is that 30,000 foot view, and we get really into details on this when you come in for what we call a buyer consultation. And in that buyer consultation, as I mentioned before, we go through all of this. We go deep in the weeds on anything you have questions on. We want to make sure you understand the process so you feel very comfortable moving through the different stages without feeling like there's any surprises or monsters in the closet or anything going to jump out and get you. We want to make sure you're very well prepared throughout the entire process. And of course, we're there with you on your side the whole time. We've been doing this for over 30 years in the Triangle, lots of experience. We have a full-on team here who has your back every step of the way. So if you have any questions on this or you're curious about starting your home buying journey, feel free to reach out to us, 919-867-1400. Go to our website, mathisrealestategroup.com, or just message us on any of our social media platforms. We are happy to answer anything for you guys, and we look forward to helping you buy a home in 2020.